What is the gold price and what is the silver price? These are seemingly simple questions without very simple answers. In tonight's bullion market update, we're going to focus in on a complex subject which should, from a layperson's, novice, outsider looking in perspective, seem simple. Welcome to the rabbit hole that is precious metals in the 21st century. Let's first establish that we're indeed operating in manipulated markets, and that can be proven by daily price data. To do that now, but quickly, we're going to borrow from Real Vision's Gold Manipulation Fact or Fiction video to establish that in the short and medium term, spot prices for gold and silver can be moved by interested parties to both, most often of late at least, to the downside, but also to the upside as well on occasion.
Well, the gold price is absolutely manipulated. When I say that, I'm not, implying some deep, dark conspiracy. I don't think Janet Yellen wakes up in the morning and thinks about gold. I don't think Janet Yellen knows anything about gold, to be honest. I mean, she's sort of a geeky, liberal labor economist who worships the Phillips curve. So I don't think Janet Yellen's behind some conspiracy to, suppress the price of gold. But there's absolutely manipulation. And I've spoken to several experts. One is a PhD statistician. So it's not a PhD in economics, it's a PhD in statistics, works for one of the largest hedge funds in the world. He looked at a 10-year time series, and he took literally tick by tick information on the COMEX gold future for 10 years. And he said there is no explanation for this data other than manipulation. It could not possibly have happened through normal market forces. In particular, he noticed that at the end of the day, like on the last trading tick, on the COMEX, the price of gold got smacked down, and then at the open the next day, it could kind of pop up again. So he said, well, this is the easiest trade in the world. Just buy gold right after the close and sell it the next morning, just before the open, and you'll just make consistent, steady profits. Well, anyone who knows anything about markets and how they operate knows that you cannot make consistent, steady profit. This is what Bernie Madoff said he was doing, right? So he said the probability that the price naturally goes down at the close and naturally goes up the next point is zero after 10 years. And this is not inference. I mean, this is like DNA. You may not see the crime being committed, but if you have the DNA evidence, you can be pretty sure who did.
Hello there, on behalf of SD Bullion, this is James Anderson. Before we continue forward, do me a quick favor, hit the like button below so others who might be currently asleep at the wheel can perhaps learn this critical information as well. Silver and gold had slightly up weeks in terms of fiat spot price action. The spot gold-silver ratio ended this week around 66. It is yet to be determined whether or not the bottom is in spot silver and gold. We shall see how the weeks unfold upcoming. Now, the gentleman who was just speaking is best-selling author and precious metals expert James Rickards. This week, on the Daily Reckoning website, he wrote an interesting blog post on this very topic about what is the gold price and what is the silver price. Now, you might be rolling your eyes, but I've been in this industry working and investing in precious metals for over a dozen years. And I learned something every day. Today was no different. And one of the most complex questions to answer is, what is the price of gold? So whether you be a newbie silver squeezer or a grizzled old gold bullion boomer bug, we're going to ride together and read through this article. What's the real price of gold? What's the price of gold? That seems like a ridiculously easy question to answer. I'm looking at a trading screen right now, and it displays a price of $1,733.80 per ounce. That price may change a bit by the time you read this, but it would only take a fresh glance at the screen to get the new price. Case closed. What's the price of silver? Again, question seems easy to answer. My trading screen right now says 26.82 per ounce. That price also changes, but only takes another look at the screen to fetch a new price. Nothing to it. If only things were that simple. They are not. In fact, establishing prices for gold and silver is far more difficult than it sounds. Further, the different prices on offer and the reasons for those differences can tell us a lot about what's going on right now in precious metals markets. Paper, not metal. First off, the prices I quoted above are not for gold and silver in the traditional physical sense. They are the 1 ounce prices for COMEX gold and silver futures contracts. COMEX, a division of the Chicago Mercantile Exchange, is the world's largest futures and options trading market for metals. Futures contract gives the holder price exposure, but it does not give you physical gold or silver. It's a paper contract governed by exchange rules. It can be subject to early termination under those rules in the event of disorderly markets or other market disruptions. So we're talking about paper gold and paper silver, not the actual metals. There's a process for taking physical delivery at the expiration of a long contract position, but this is used in only a small number of expiring contracts. Most contracts are cash settled, rolled over, or paired off without any physical product being delivered. If more than a small number of contract holders ask for physical delivery, the authorized vaults would quickly run out of bullion. The exchange would intervene and cash settle the contracts or order that holders trade for liquidation only. Physical delivery would be denied. So why do traders prefer paper gold and silver over the real McCoy? Leverage, leverage, leverage. Gold and silver futures contracts offer leverage. Traders are required to put down initial margin, typically about 5% of the amount of bullion subject to the contract. The initial margin rules mean that $100,000 of capital can control $2 million worth of gold or silver. An upward price move of 5% in the actual metal will result in a 100% return on equity of the cash invested. That's why hedge funds typically trade in futures rather than physical bullion, because the cash on cash returns are much greater. Of course, the opposite's true. It would only take a 5% decline to wipe out the initial margin and leave the trader with a 100% loss. Failure to meet a margin call results in the contract being terminated and the defaulting trader likely being barred from further exchange dealings. It's a highly complex trading process, but the main point is that there's no actual gold or silver involved. What about gold or silver contracts with the big banks who are members of the London Bullion Market Association, LBMA? Well, these purchases are also paper contracts for what is called unallocated bullion. That's a fancy way of saying no bullion. An LBMA bank might have 1 metric ton of gold and sell 100 metric tons of unallocated gold contracts based on that one single ton. Again, if all the contract holders gave notice that they wanted to convert to fully allocated bullion and take physical delivery, there would not be enough gold or silver to go around. As with futures, these LBMA contracts would be subject to early termination and cash settlement. Ultimately, you'd get no physical bullion when you most want it during a buying panic. Yes and no. What about the famous London gold fix? Surely that involves physical bullion and presents a fair market price to the public? Yes and no. Process does involve the purchase and sale of physical bullion, and it's done through an auction-style procedure. There are 15 participating banks in the gold fix, including HSBC, Goldman Sachs, Citi, JP Morgan Chase, Bank of China, Coke Supply, Morgan Stanley, and Toronto Dominion Bank. Problems are that the fix is not open to the public. It involves large quantities only. Minimum size is 400-ounce gold bar worth about 720 grand, and most of the gold never physically moves. Just remains in a designated vault, and ownership changes hands through a warehouse receipt or ledger entry. There is also a London silver fix, by the way. Fraud and manipulation. Short, all of these trading venues, futures, LBMA forwards, and London fix, have unique contract features that either have no physical bullion involved or have trading limited to big banks, which do business in large volumes and therefore are not accessible to everyday investors. Even when the gold, silver are paper and not physical, the temptation to rig markets seems irresistible. All of the paper gold and silver markets and the London fix have been investigated in recent years and were found to have engaged in various kinds of front-running, market manipulation, and bid rigging. Substantial fines and penalties have been assessed, and some actions have resulted in criminal convictions. But what if you just want to buy physical gold and silver and take delivery for storage in a safe, non-bank vault? How would you go about it? This is where things get interesting and where the true price of gold and silver is revealed. The first hurdle is to find a dealer, and that's not as easy as it sounds. Find the right dealer. There are hundreds of online dealers available. Some have fine reputations and offer outstanding service. Others are sleazy and try to push you into high-priced rare coins, not worth it unless you're a true collector, in which case you should look for an established rare coin dealer. Otherwise, they are likely more interested in getting your IRA business than in delivering coins and bars. Dealer commissions also vary and can be quite steep. Right now, the UK Royal Mint website is offering a 1 troy ounce gold bar with a 9.2% markup or commission over the COMEX price. Commissions or markups in silver are even greater. 15% premium on silver coins is not unusual. This would move the price of a 1 ounce silver coin from $26.82, the current COMEX price, to $30.85 or higher. Of course, this assumes availability. U.S. Mint has periodically announced that it will not be taking new orders from dealers due to a shortage of bullion and minting capacity. The mint remains in operation only to fill existing orders until further notice. So again, what's the price of gold or silver? The answer depends on whether you want a paper contract or physical bullion. It depends on whether you want leverage and margin calls or outright ownership. It depends on whether you buy new production or older, rarer coins, etc. Sales taxes, storage costs, insurance costs, exchange rates if you buy from a foreign mint, and shipping costs make the calculations even more complicated. Two key takeaways. Despite these variables, two things are clear. The cost of owning bullion coins or bars you can hold in your hand is materially higher than the official prices you see listed on the exchanges. And that tells you that actual bullion is considerably more scarce than paper bullion. The second point is that scarcity of the physical bullion relative to paper gold and silver contracts will emerge with a vengeance in a buying panic resulting from any number of catalysts, including war, a new pandemic, a stock market crash, bank failures, or social disorder. The paper holders will try to convert to physical and find that it's too late. The vaults will be empty. The lesson for investors is also clear. Get your physical gold or silver now while you still can. Don't sweat the commissions because that's the real price. Then rest easy. I predict gold will ultimately go to $15,000 an ounce. Commissions are nothing when you look at the big picture. The buying panic is just a matter of time. Regards, Jim Rickards. So here's a real-life example from my personal bullion buying that makes the case about why sometimes paying a massive premium for silver bullion is worth it. And sometimes within only a few years of time, it totally pays off. The start of 2009, I made a rather large bullion purchase at the time, at least for myself. I was a pretty young guy. I was a newbie at the time, and I know to me, it even then it looked ridiculous. I didn't buy it, totally 100% confident. Looking back, though now, it was pretty great value. And I made a purchase during a thin bullion shortage era, which was ongoing at the time. Again, the beginning of 2009, so we're just getting out of 2008. You had dozens and dozens of banks fail, and even multiple mega banks failed. At that beginning of 2009, people still didn't know if there was going to be more trouble. The Federal Reserve was doing its QE launch, and nobody knew whether or not we were out of the woods. I believe the stock market bottomed in March 2009. I actually kind of liked 2009. People were humble. It was actually a nice time. But, not like today. They're absolutely arrogant, think they know everything. 2009, people didn't know much, and I actually kind of liked that time. But anyway, so on January 5th, 2009, I got 1,000 silver Canadian Maple Leaf coins and 500 American Silver Eagle coins at the price point you see there. Obviously, there's a rather long delay in delivery, but I didn't sweat it too hard because I knew and trusted my counterparties. I work with them directly, and they never failed to deliver on their word. So it wasn't a big deal that the delay in delivery was multiple weeks. But January 5th, 2009, the spot price of silver was just over 11 an ounce. So I basically paid almost a 30% premium over the then spot price for those bullion coins. Now that sounds nuts, and to me at the time it sounded crazy because most people are trained to think in terms of paper and derivative investment world where, commissions are fractions of that. But I don't buy bullion without a long time frame of patience, obviously. I still own those Silver Eagles and those Silver Maple Leafs, and looking back on it, hindsight 2020, I bought a case of Silver Eagles once in 42 spots. So there are purchases I made that were, looking back on it, perhaps untimely, and there are purchases I made that were perfect timely. What I'm showing you right now is a nice time purchase, but there's others I made that were higher. One of the ones I made that were higher, I sold off recently in the COVID crisis for a good premium. I took the arbitrage of that currency and put it into lower priced silver bullion and ended up creating a lot more ounces by doing that play. But looking back on this entire 2009 scenario I'm painting for you, I'd do it again, obviously. James Rickards ended his daily reckoning piece that we just read through by basically inferring a bullion squeeze was coming one way or another in the future to the world. And he also stated that his long-term fiat Federal Reserve note price target for gold is now $15,000 an ounce. Now, speaking of long-term price targets for not only gold but also silver, last night we here on the SD Bullion YouTube channel published a fourth update on our conservative long-term targets for gold and silver based on the expanding fiat Federal Reserve note M0 monetary base at the moment. Now, if you look at the silly picture ahead of you, it's also overlaid with an M1, M2, M3 chart. The link for that 10-minute video is below. Go check it out if you missed it. We're going to finish tonight with a related chart. It backs up many of the points I make in that video in terms of long-term debt supercycles, how gold reacts over lifetime spans of time. We're entering the end phase of this post-World War II debt supercycle. And what we're looking at here is a measurement of roughly 60 nations over a 200-year period. Looking back at U.S. history with our gold glasses on, we can see that the last 3 times nearly half of the nations studied here went into debt defaults or debt restructuring cycles. The value of gold exploded and front ran it by rocketing higher. Remember, we have a total global debt level currently that's nearing 300 trillion, and the world's GDP is not a third of that. My hunch is this next gold mania will rhyme with this chart, which you'll have as gold go ape and fiat currency inflation and defaults headed that way as well. That's it for this week. SD Bullion Market Update. Go check out the latest gold silver price video that we just released if you did miss that. And as always, all you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.